Assalamualaikum warahmatullahi wabarakatuh. My name is Mirza Izzati binti Abdullah and my metric number is 018023F1080. So today I would like to present topic 4 about audit in computerized environment. So first we go to the introduction, which is a smart trade online operates entirely in a computerized and online environment. Every sales transaction, payment, and inventory update is processed automatically through its integrated system. So it's because financial data is generated and trade electronically with very little manual input, and the company relies heavily on IT system for both daily operations and financial reporting. This means that as auditors, we must understand the IT environment thoroughly before planning our audit work. Okay, next slide is we go to the audit objective in a computerized environment. So first thing first is we look at completeness. In a computerized system, it's important to ensure that every transaction processed by the system is fully captured in the records. So for the missing entries due to downtime or input errors could affect the reliability of financial statements. Next is accuracy. Since the system automatically calculates figures like totals, discount, or taxes, auditors must confirm that these are processed correctly. So, any miscalculation or system error could lead to misstated balances. Next, the third objective is existence. Even though transactions are recorded electronically, auditors still need to verify that assets, liabilities, and transactions actually exist. This may involve physical checks, confirmations, or reconciliation. Next is authorization. Computerized systems often rely on access right and approval workflows, so auditors must ensure that only authorized personnel can initiate or approve transactions so that the company's policies are followed. So last but not least is overall the goal is to make sure the financial information generated by the system is reliable and free from material misstatements. This objective remain the same as in manual system, but the way we test them is adapted to the IT environment. So for the next slide is about changes in audit scope. First thing first is how in a computerized environment, auditors must evaluate IT general controls. This includes checking access right, backup procedures, and overall system security to ensure the integrity of financial data. There is now greater reliance on automated controls instead of manual checks. For example, the system may automatically validate inputs or reconcile transactions, so auditors need to test whether these controls are functioning properly. Another change is that the audit trail may exist only in electronic form, unlike manual system where you can trace paper voucher easily. Here, auditors must rely on system logs and electronic records to follow transaction. Auditors also make use of computer-assisted audit techniques, or as known as CAATs, to test large volume of data. This allows them to identify anomalies or unusual patterns that will be impossible to detect manually. Finally, auditors may require a basic understanding of the client's IT system. Without this knowledge, it will be difficult to plan audit procedure effectively or to evaluate whether the system is reliable. Next slide about major IT risk identified. One of the biggest risks is unauthorized access or hacking. If outsiders gain entry into the system, they could manipulate financial data or commit fraud, which is directly threatens the reliability of the accounts. Another risk is data loss or system failure. Technical issues or cyber attacks could wipe out important records, leaving the company unable to support its financial statements itself. Program errors or system bugs are also a concern. If the system miscalculates figures such as total or taxes, the financial information generated will be inaccurate and misleading. So next and lastly is the lack of segregation of duties within the system increases fraud risk. If one person can initiate, approve, and record transaction without checks, it will be becomes much easier for errors or intentional manipulation to go undetected. So in this slide is about impact on financial statement. So first is accuracy of data processing. Since transactions are handled automatically by the system, errors can occur if there are software bugs, incorrect programming, or wrong inputs. This mistake can lead to inaccurate balances, such as misstated revenue, payroll, or inventory figures. The second area is completeness of transactions. IT system may fail to record all activities if data is lost, so corrupted or not captured properly. This could result in liabilities or expenses being understated or asset overstated, which is ultimately affect that net profit and balance sheet integrity. So the third area relates to system access and authorization controls. If user access rights are weak, unauthorized changes to financial data may go undetected. This increases the risk of misstatements or fraud and reduces the trustworthiness of the reported figures. Next, we go to the slide about recommended controls. The first control is access management. By limiting system access based on job roles, we can prevent unauthorized users from carrying out transactions or making changes to financial data. Next is data validation. This means putting checks in place to ensure that all entries are accurate and complete. For example, the system should flag missing information or incorrect formats before processing to other steps. Regular backups are also essential. Automated backups protect against data loss in case of system failure or cyber attacks, and they make sure records can be restored quickly when needed. Another important control is maintaining a proper audit trail. Logs of all system transactions allow auditors to trace activities, verify accuracy, and detect unusual or unauthorized changes. Finally, system updates and testing must be carried out carefully. Updates and patches should be tested before implementation to avoid errors that could disrupt operation or compromise data integrity. So lastly, we go to the last part of my presentation. On this slide is conclusion. So to wrap up, effective IT controls are the backbone of accurate and reliable financial statements. If these controls are weak, the company face high risks such as misstatements, fraud, or even data loss. That's why important for regular monitoring, proper access restrictions, and strong audit trail are so very important for auditors and many business company. So they build trust and ensure compliance by implementing the recommended controls. we have discussed earlier. Smart trade can reduce trace. Smart trade can reduce risk and strengthen the integrity of its financial reporting. So that's it from me. Thank you.